There's some really hot stocks reporting earnings this week. I'm going to take a look both at the earnings surprise chart and at the price of consensus chart. We're going to use the one that overlaps the two so we don't have to flip back and forth. But these stocks have spectacular charts. And while some of the news about the tariffs may be rocking a few of them a bit, still many of them are trading near or at their new all-time highs going into these earnings reports. What are they? Couple are Mag 7 stocks. Yeah, some of those have really good charts. Let's dive right in. Okay, the first one out of the gate is one of those Mag 7 stocks, and it is Google, ticker GOOGL. I own this in my own personal portfolio. I know many of you do as well. And look at this chart. This is one of the stocks that is breaking out going into this number. You can see that it has put together a nice earnings surprise streak. The earnings surprises are these little green arrows, or red, as the case may be. But the last red wasn't until back here 2 years ago in February of 2023. It had the bad streak there when all the big growth companies were laying off employees and trying to cut costs in 2022. But then it's come out of it and is surging higher here. Earnings expected to be up 38% here in 2024, but then we're going to close that out. And another 11% expected for 2025. That's this line right here. And then look at 2026. Another huge gain in earnings that looks to be double digits for 2026. But we will see after this earnings report, because then we will rotate into the new year with the data on Zacks.com, and we'll get some of those earnings estimates from the analysts. Now, one thing to watch that I'm going to be watching with Alphabet is really YouTube. It's become this breakout star. Over the last 4 quarters, it's done about $50 billion in revenue. So can that continue in the fourth quarter? And what does it look like moving forward, even for YouTube? Is there more growth still to come? So I'm going to be watching those numbers really closely, but advertising is always the place to look for Alphabet, and that's still the big driver with them. So that's Alphabet, ticker GOOGL. Then we're going to switch over to a stock that's pulled back a little bit off of its highs, but still trading close and still with a fantastic chart. And it is Chipotle, ticker CMG. Now, this stock is going to be in focus this week, even more than normal, because of the tariffs. And those tariffs are going to go on the avocados, of which they have already dealt over the last couple of years and during the pandemic with much higher prices on the avocados. And so we've all seen that as consumers in the extra costs they're charging for the guacamole. But they're not the only restaurant, obviously, that uses large quantities of avocados. It's all over the United States. So we'll see what they intend to do. Are they going to absorb the costs if avocados rise dramatically here? Or are they going to continue to pass that along as, a special price and raise the price of the guacamole? We will see. I'm going to be watching that. But look at the earnings surprise chart. Very nice streak here with 7 in a row. And then this is the earnings growth. No one does it better than Chipotle really here with just the sheer double-digit year-over-year growth. So 2024 expecting 23%, 2025 looking for another 18.4%. But we'll see what they have to say. Will this cause another breakout in the stock here, or is the tariff news too much to overcome at this moment? We don't know. Trading at 44 times, but it's always basically traded at 40 times or above throughout the last decade or more, for as long as I can remember looking at it. So you're not getting a super cheap stock here, but you are buying this growth. So that's Chipotle, ticker CMG. Then we have a surprise chart on this week's earnings all-star that I have talked about in the past, but I didn't really realize how good the chart was until I looked at it for this video. And you can see it's Hilton. Yes, the hotel chain, ticker HLT. We're all traveling, and the chart is reflecting that now, even though we had revenge travel happening at the breakout over here of the stock during the pandemic. It did go sideways for a number of years, but now that travel is red hot, shares are soaring, new 5-year highs here, and it's expected to grow earnings by 12.7% here in 2024 and another 12.2% in 2025. This is 12 earnings beats in a row. And you can see during the pandemic, obviously, it had a lot more difficulty to be expected with everything that was going on in hospitality during the pandemic. But this nice streak extending, shares looking to break out once again here. Not cheap, trading at 32.6 times. Is that too expensive for a stock doing 12% earnings growth a year? I don't know. We're going to find out from the street, but this is Hilton, ticker HLT. Then we're going to the other Mag 7. I also own this one in my personal portfolio. It's Amazon, ticker AMZN, and it's got the Zacks number 2. So this is interesting going into this earnings report. So much like Google, it had difficulties with earnings in 2022. Lots of layoffs and cost cutting then. And you can see actually on the earnings consensus, it was down as well during that time. Then things turned around and we've seen some huge earnings beats the last couple of quarters. This one, 25%. This one, a lot smaller, the arrow, so only 17%. The quarter before that, quite a huge arrow, 36%. So the company that wasn't known for its earnings beats, which is Amazon, they never really cared in the past before Jassy took over as CEO, but now apparently maybe they do. And they're putting together this nice streak. The stock is responding as well with the all-time highs here in 2025. Earnings expected to be up 79% in 2024, but it's kind of coming off a lower level there, but another 20% in 2025. You can see that here. And then look at this big jump for 2026. Will we see this after this earnings report with whatever outlook they give us? We'll see, but that's even more than 20% there for 2026. So some nice earnings growth here. And really, the stock is cheap for historic Amazon. So it's trading at 38 times, but historically it's traded much more expensive than that and over 40 times. So it's kind of actually cheap, dare I say it here, for Amazon. But you have to ask, are you willing to pay 38 times for this kind of earnings growth? Well, if I'm getting more than 20% next year on a $1 trillion market cap company, yeah, might be my answer. So I'm going to be watching this one real close. It's got a lot of moving parts with Whole Foods, the online marketplace, Prime Video, and everything else it's got going on. So stay tuned, but this is going to be a big one to watch with this spectacular chart. And then we're going to wrap it up with shoes. People love shoes when there are recessions, but even right now, without a recession, Skechers, ticker SKX, is also crushing it. And you can see the stock is breaking out here in 2025. New all-time highs for it as well. 2024 earnings growth of 21.5%. 2025 right now is at 13.5%. I know you're wondering about the tariffs, but Skechers has been moving its production out of China for a while now. It is global, so it's got production all over. Doesn't mean it's not going to be hit by this latest round of tariffs. I'm not sure if they've got anything in Mexico or Canada, but another area to watch would be some kind of universal tariff where it didn't matter where they moved their production unless it was to the United States. they are still going to get hit. So that is going to be a big question on this conference call as well. But sales have been strong at Skechers. It's been on trend with a lot of its shoes. It still has Snoop Dogg, I believe. It still has Martha Stewart. It still has that memory foam. And I'm a big fan. I don't own the stock, but I do own the shoes. So I'm going to be watching this one closely. And you can see the earnings trend is outstanding as well. It did have this one miss in here in 2024, very small, just 3.2%. But otherwise, a lot of green going all the way back to 2022. So what is the valuation on Skechers? It is actually a cheap stock, trading at 15.7 times. For the shoe manufacturers, that's cheap compared to, say, Deckers, where it's trading at double the PE and more, double and more than what Skechers is. So Skechers, global company, a lot of moving parts there as well. Big business in Europe and Asia. So we'll see what Skechers does, ticker SKX, but this is another spectacular chart. So it's not all about the Mag 7s, even though we had two on this video. There's a lot of other stocks that are trading at or near their all-time highs in a variety of different industries. So expand your horizons beyond the Mag 7. And you might find some of these gems out there, at least on the growth side. You might have to pay up for them, but the growth apparently is still there. And these are some spectacular charts. So be sure to subscribe to get all of our videos. I know many of you are on YouTube. Go to Zacks.com/YouTube to get everything, including our top stock picks of the week. For more stock picks, click on that video and you'll get two Zacks top rank strong buy stocks every week on that video. But I'll be back as earnings season rolls on with some more of my own spectacular charts here. So be sure to join us.